Welcome to Biz Help for You, the show that saves you the expensive learning curve by providing advice from industry experts in every facet of the entrepreneurial journey. Too many small businesses collapse. According to the U.S. Census Bureau, 20% fail within their first year, and less than 35% make it to their 10th anniversary. The goal of this podcast is to change that statistic. So if you're interested in learning more to be a successful entrepreneur, tune in today.
Hello and welcome to Biz Help for You with Candy Messer. Thank you for joining me today. In this episode, I will discuss some topics that may affect you when it comes to taxes. Although I'm not a CPA and I don't file personal or business income tax returns, Affordable Bookkeeping and Payroll Services does file necessary paperwork except for income tax returns. And we help entrepreneurs understand their obligations to local, state, and federal tax agencies. So I'm going to share some tax-related info you'll need to know. Being an entrepreneur comes with a lot of freedom, but it also brings some unique tax responsibilities. There are three main tax categories I'm explaining today that you'll want to understand: income tax, self-employment tax, and payroll tax. I'll explain these in more detail. The first is income tax. Just like anyone earning an income, self-employed individuals are subject to income taxes. Your federal and state brackets will depend on how much your business earns, along with other factors that affect your taxable income, such as capital gains or credits like child tax credit. Your business structure, income level, and deductions all play a role in determining how much tax you owe. Income tax is calculated based on your taxable income, which is your remaining profit after deducting eligible expenses and adjustments from income. The way you report and pay income tax depends largely on your business entity type. Sole proprietors and single-member LLCs. Your business income is reported on a Schedule C, profit or loss from business, on your personal tax return, Form 1040. The net profit from your business is added to your other personal income sources and taxed at your individual income tax rate. Tax brackets for individuals are progressive, meaning higher income levels are taxed at higher rates. Partnerships and multi-member LLCs. Partnerships file an informational return, Form 1065, but income is passed through to the individual partners via Schedule K1. Each partner reports their share of the partnership's income, deductions, and credits on their personal tax return. S corporations. Like partnerships, S corporations are pass-through entities. Business income is passed through to shareholders via Schedule K1, and shareholders report it on their personal tax returns. Unlike sole proprietors or partnerships, S corporation owners who work for the business must pay themselves a reasonable salary, which is subject to payroll taxes. C corporations. C corporations are taxed separately from their owners. The corporation pays a flat federal tax rate on its profits, and shareholders are taxed again on dividends received, leading to double taxation. Now let's move on to self-employment tax. Self-employment tax can be a significant financial burden for entrepreneurs, so it's important to fully understand what it is, how it works, and how you can plan for it. In a traditional job, employers pay 6.2% for Social Security and 1.45% for Medicare, and the employee pays the same. But if you're self-employed, you're considered both the employer and the employee, so you're responsible for the full 15.3%. The rate is broken down into 12.4% for Social Security. This applies to income up to the annual wage-based limit, which increases yearly. For 2025, that maximum taxable wage is $176,100. 2.9% for Medicare. This applies to all your net earnings with no income cap. For high earners, an additional Medicare tax of 0.9% applies to income over $200,000 for single filers or $250,000 for married couples filing jointly. So, how is self-employment tax calculated? Self-employment tax is based on your net earnings from self-employment. Net earnings are calculated as your gross income from your business minus allowable business expenses. To reduce the impact, the IRS allows you to deduct half of your self-employment tax as an adjustment to income on your Form 1040. This deduction doesn't reduce the employment tax itself, but lowers your taxable income for income tax purposes. Understanding self-employment tax helps you avoid surprises and manage your cash flow effectively. While it may feel like a burden, planning ahead and taking advantage of deductions can make it more manageable. Now, let me explain paying quarterly estimated tax payments. As I mentioned a few minutes ago, as a business owner, unless you're a shareholder in an entity, you typically don't have taxes withheld from your income, which means you're responsible for making quarterly estimated tax payments to the IRS and your state if you're subject to income tax there as well. These payments cover both income tax and self-employment tax. The due dates for quarterly taxes are April 15th, June 15th, September 15th, and January 15th of the following year. Note that if these dates fall on a weekend or a holiday, they are due the next business day. And failing to pay estimated taxes on time can result in penalties and interest. Now, let me briefly talk about other payroll taxes. If you have employees, your responsibilities increase. You'll need to cover half of their Social Security and Medicare taxes, as well as unemployment and state payroll taxes. Additionally, you're required to withhold income tax from your employees' paychecks and ensure these amounts are deposited with the IRS and applicable states on time to avoid penalties. The payment schedule for these taxes depends on the amount of federal tax you withheld during the look-back period. While some small businesses might qualify to pay annually, most will need to remit taxes monthly or even with each payroll run. Remember that if you are a shareholder of an S corporation, you are supposed to pay yourself a reasonable salary through payroll. So you may also be an employee of your company and withhold and remit taxes from your own paycheck. Next, I want to make sure you are aware of the tax filing deadlines. Most think of April 15th as the deadline, without an extension. But most business types are due earlier, and the extension deadline is also a month before the due date for individual tax returns. If you operate a partnership, S corporation, or LLC taxed as an S corporation, the original filing deadline is March 15th. If you file an extension, the new return due date is September 15th. For C corporations, LLCs taxed as sole proprietorships, and individuals, the due date is April 15th, with the extension deadline October 15th. If these due dates fall on a weekend or a holiday, then the return is due the next business day. Keep in mind that filing an extension only allows the return to be filed later without penalty, but any income tax owed still must be paid by the original filing date, or penalties and interest will be assessed. Once you file your return, you want your refund, if applicable, as soon as possible. So when can you reasonably expect to receive the money? According to the IRS, many refunds are processed within 21 days, but there are a few factors that affect when your refund might be processed. Refunds for people claiming the Earned Income Tax Credit, EITC, or Additional Child Tax Credit, ACTC, can't be issued before mid-February. The law requires the IRS to hold the entire refund, even if the portion not associated with the EITC or the ACTC. Some returns may require additional review and may take longer if their system detects a possible error, the return is missing information, or there's suspected identity theft or fraud. The IRS continues to strengthen security reviews to help protect against identity theft and refund fraud, and this can delay when your refund is processed. Finally, if you have filed on paper and or requested a paper check, This will also delay how long it will take for your return to be processed and payment mailed out to you. To find out when you can expect to receive your refund, visit the IRS site to use their Where's My Refund tool, which can be found at irs.gov/where's-my-refund. I'll include the link in the show notes. Your refund status should show 24 hours after you e-file a current year return, 3 or 4 days after you e-file a prior year return, and 4 weeks after you file a paper return. To use this tool, you'll need the following: your Social Security or individual taxpayer ID number, an ITIN, your filing status, and the exact refund amount on your return. If you prefer, use the IRS To Go app on your mobile device. You can also create an online account which can show the activity that has occurred, including filed documents and payments. I've included links for both the personal and business domains in the show notes. I also just wanted to touch on the due dates for payroll tax returns. These are different than income tax returns. So payroll returns are due quarterly. So the month after quarter end is the filing due date. So for the first quarter, for January through March, your due date is April 30th. For second quarter, which will be April through June, it's due in July. Then from July through September, that is due in October. And then from October to December, that will be due the last day of January. Now, annual returns, which include the federal unemployment tax return and your W-2s and W-3s, those are always due on January 31st after the year has ended. So you'll want to make sure that you follow those deadlines as well as your income tax deadlines. So thank you for tuning in today. I know this is a lot of information and a topic many don't like to think about, but my goal is to keep you informed, and I hope you found what I shared helpful for you. If you have any additional questions or comments, be sure to reach out to your tax preparer who can guide you with information specific to your situation. And if you need bookkeeping, payroll, or other compliance help, reach out to Affordable Bookkeeping and Payroll Services at 310-534-5577 or contact@abandp.com. My team and I look forward to assisting you.
Thank you for tuning in today. Would you please share this episode with those you know and leave a review on your favorite platform? And if you find our show informative, would you consider being a financial sponsor to help me continue my mission to educate business owners? A link is located in the episode description, and no amount is too small. I'd really appreciate your support. If you are interested in connecting with our guest and receiving the offer they had to share, a link to our resource page is in the show notes. Finally, if you have any bookkeeping or payroll needs, reach out to us at 310-534-5577 or contact@abandp.com. My team and I are eager to assist you. Until next time, have a great day.
Thank you for listening to Biz Help for You. Please join your host, Candy Messer, again next time. Have a terrific day.